Hi, I'm Michael Lind. I'm the Policy Director of the Economic Growth Program at the New America Foundation, and I'm interviewing Reed Hundt, who's co-chairman of the Coalition for a Green Bank. Thank you for joining us.
Hi, Michael.
Well, tell us what the Green Bank is.
Well, the Green Bank right now is a feature of the House Energy Bill. There it is called CEDA, the Clean Energy Development Authority. We called it the Green Bank when our coalition gathered last year, and we have business cards that say Green Bank, so we aren't changing our name, but the legislative name now is CEDA. You will also see it in Jeff Bingaman's energy bill that came out of his committee on the Senate side.
Well, under any name, what does the Green Bank do?
Provides low-cost financing support, government-backed loan guarantees on a continuous basis so that private market debt suppliers can go and help fund clean energy for the next 20 years.
And by clean energy, what do you mean in particular? Is this the deployment of particular technologies?
Generation, distribution, and transmission.
So it's pretty comprehensive.
And associated manufacturing. The House bill is very broad in the potential projects and very flexible in the number of financial instruments that the bank could support. This is an important thing I need to make sure I don't leave out. It is a wholesale nonprofit bank, meaning retail lenders, small local regional banks or Goldman Sachs can be the retailers who can actually do the project finance but go to the government to get guarantees. That means that the cost of debt will go way, way down. And the reason we want the cost of debt to go down is that then the projects won't raise the price of electricity to consumers.
Well, that makes sense. Now, is it technically?
That's why they voted for it in the House.
Well, that's a shrewd move, politically and economically. So this is a government-sponsored entity. In that sense, it's like Fannie Mae or Freddie Mac.
Of the stock, but it's unlike Fannie Mae because it is a wholesaler that is nonprofit. So one way that Fannie and Freddie got into a lot of trouble is that their equity was owned by people in the private sector who wanted them to make bigger profits. Well, a nonprofit doesn't want to make bigger profits. Now, you know here at New America about nonprofits. You're not in the profit-making business, and it means that you support a lot of fresh ideas and a lot of new thinking, but you're not into self-interest. And this bank isn't self-interested. It would be acting for the taxpayers and the consumers and the citizens to make sure we have clean energy year after year after year in volume at big scale forever.
Well, so it's in a tradition of government-sponsored banks or in small business administration, things like that. Yeah.
In fact, every government in the world uses some form of government financing for infrastructure. The United States is unusual in that we hardly ever do it. And we're unusual in a bad way because we can see that our electricity network hasn't been rebuilt in decades, and our investment capability behind alternative energy is really, really paltry. In fact, clean energy comes and goes as an idea and hardly exists at all in the economy at scale.
Now let me ask you about the bond finance dimension of this. There's a proposal that there will be green bonds to finance the Green Bank.
Now they're green like dollars, meaning they're the same bonds that Treasury sells every single year.
So these are distinct from existing energy efficiency bonds, like the clean and renewable energy bonds.
It's not that.
It's not the qualified energy conservation bonds.
What we're talking about
this would be a new category.
Well, it's just a label, to tell you the truth, for just a traditional security sold by the Treasury Department. We call it a green bond because what we mean is the Treasury would carve out some of the proceeds and then use that to capitalize the bank. So
that makes sense.
To be honest, more of a piece of rhetoric than a description of an instrument.
And the bank would use leverage? It would be like a traditional bank, leveraging its capital base?
So, in Congress, the basic rule is for every dollar of capital in a lending institution, you can loan 10 times as much. The reason is that the assumption is that these projects won't fail at a failure rate any higher than 10%. In the electricity area, actually, the failure rate is more likely going to be 1 or 2%. Because we're not talking about adventurous technologies. We're talking about proven, serviceable technologies that can't get deployed at scale without some financing support.
Well, I think after what happened to Wall Street, 100-to-1 leveraging might be an uphill battle for you.
Nobody wants that. But if the government puts in $7.5 billion into the bank, which is what the House of Representatives voted for, that means we can guarantee $75 billion of loans. And if every project is half loan and half equity, that means we can fund $150 billion of projects. And $150 billion of projects translates to approximately a 10% reduction, all by itself, a 10% reduction of the amount of carbon that goes into the atmosphere.
Well, that's impressive. Explain what you mean by half loan, half equity.
Well, if I'm going to pull together a project to build a wind farm, normally I have somebody provide equity by the stock of the new business, and then in addition I borrow some money too. So half equity, half debt is a very conservative approach. Many projects have much more debt, but we used very conservative modeling in order to be on the safe side in terms of financing risk. We don't want the taxpayers to actually run the risk of losing any money at all here. This debt would get paid back.
Now, this is part of the energy bill that still has to be passed by the Senate. If it doesn't get enacted by the Senate, this could be passed as a separate piece of legislation, right?
I don't think that's practical or realistic. I think that it's critical that there be a package. The House thought there should be a package, and the House package is actually pretty simple in outline. There's a thing called RES, Renewable Electricity Standard, that creates demand for clean energy, and then there's the need for some transmission lines to carry the electricity from wherever it's made to your house, and then there's the green bank to make sure you don't get charged anymore as the consumer.
So you see it as part of a comprehensive system.
Comprehensive, and the last piece of the four pieces is the cap. And what the cap does is it tells a utility, since you can finance the clean energy, and since you have to go for it, you need to turn something else off. The cap tells you to turn off the dirty facilities first.
Well, so a lot is riding on the Senate.
Well, the future of the world, and all kidding aside, but aside from that, in a much more immediate term, we need to have a jobs bill, another jobs bill. This is it. We need to have economic stimulus. This is it. This could be thought of as stimulus part 2, just for the energy sector. But if the bank were funded in what I think is the complete way, not $7.5 billion of cash, but $50 billion, it would create between 1 and 2 million jobs permanently added to the workforce.
Now, is that $50 billion one-time capitalization or per year?
That's all you would need ever to convert our economy from carbon to clean.
Well, in your ideal world, how would you get that $50 billion?
I would have the Treasury buy all the stock of the company for $50 billion and say we've done a good deed for the rest of the century and centuries to come.
Well, the Green Bank. Well, thank you for explaining this to us, Reed Hundt. Thank you.